What's up, YouTube investing aliens? Eric here, Mr. Fired Up Wealth. You might recall I did a video back in June of 2023 on Unity. And I recently got this comment on a video question. Hey, can you do a Unity video? Give us an update of what's going on. Given their bumpy performance and now big downsizing of staff, are you still bullish? And then reply to that, not since downsizing. Touche, I'm bringing it to you right here. So I'm gonna give you an update on Unity. By the end of this video, you're gonna have a good handle of what's going on with the company, with the stock. Now, I will say that that previous video is kind of a prerequisite for this video. I'm not gonna go into the deep dive about the fundamentals, the exciting opportunities in AI, because we just covered it, and that video does a great job. When this video is done, go watch that one. I think you'll learn a lot more about Unity from the fundamental side and the opportunities as a long-term investor. And in that video, you might recall this segment. Now, the stock could break down anytime, but I think if the momentum continues, you might see $50 on Unity. So basically, I told you that the stock was probably going to go $50 on momentum. And guess what? It did exactly that. Now, of course, just because the stock goes to $50, it doesn't mean that it can't come back and that it has to go up every day for the rest of our lives. Macro news, fundamental news about a company, earnings, that's going to make the stock gyrate. And this is going to be a volatile stock. It has higher beta. And quite honestly, this isn't a household name and it's not a market leader. I would consider Unity one of those love-hate stocks. Either you really like it and you understand the business, or it's not your cup of tea. So that was a good call at $50. I told you in that video that I prefer it really in the 30s. In this video later on, we'll look at a chart and I'll tell you where I think it could go. So as you know, and we've talked about it many times on the channel, a stock can have momentum, especially from traders, some news, excitement, and oftentimes it'll go up to a certain level and then the air will kind of come out of the balloon. And that's exactly what happened with Unity. And then you add some negative news, some negative sentiment, and we get to where we're at today. So let's bring an update of what's going on, my thoughts, and what I just think about the stock overall. Now, if you remember, part of the reason why the stock ripped, and it ripped hard from the 20s up to $50 exactly, one of the headlines here was this partnership with Apple for the Vision Pro. And this is a recent headline just from January 8th. Unity Software to cut 25% of staff and company reset continuation. This is what that subscriber was referring to, and he would like my thoughts. Now, before we even get into that, we should talk about the new CEO. So we replaced the CEO here recently, and you know by now, if you've been following the company, that this CEO was Red Hat CEO for a number of years. And this is a Unity shareholder letter kind of explaining what he thinks about the company longer term. He believes there's significant opportunity to accelerate revenue growth, improve profitability metrics, and increase free cash flow generation going forward. That's a big push for this, is trying to get to that profitability and that free cash flow. So we've got a lot different mindset. There's somebody new at the helm and the company's trying to go a bit different direction. But this most recent news, if you ever want to explore this on your own, guys, you can just Google Unity Investor Relations or whatever company you're looking for. You can find the SEC filings, and under 8K we're going to click on that and we're going to read through it. So here's the 8K right here. This is from January 8, 2024. It's pretty short, and what this is really telling us here is that Unity Software announced it plans to reduce approximately 1,800 employee roles, or approximately 25% of its current workforce, as it restructures and refocuses on its core business and to position itself for long-term and profitable growth. This is now the focus of the business. And of course, this is going to spook investors because it goes on to say Unity cannot reasonably estimate the cost and charges in connection with the reduction, which it expects will be substantially incurred in the first quarter of 2024. Well, we're going to have to see an earnings report. We're going to have to see how this flushes out. And of course, Wall Street never wants to have uncertainty. So it's not going to be a popular stock right now. Now, of course, you can look at this two ways. You can look at it as, well, this means that Unity's revenue is going to be really bad in the short term, the next quarter or two. Or you can look at it as just, hey, this company is trying to restructure. It's trying to get to profitability. That's really what Wall Street cares about right now. It's one of those things where if you look at some of the analysts, they say, Unity's got to do better. They've got to cut costs, do A, B, and C. Then they actually do it. And of course, the street, Wall Street, investors, they get scared because they have uncertainty. And again, Wall Street never loves uncertainty. And the answer, of course, we don't know. We don't know if it's going to be something bigger than that or not. Is it just them restructuring and it's going to be positive, or is it going to have some short-term pain? And that's going to be really going to be determined in earnings and over the next couple of quarters, and even further than that. What we can do if we're long-term investing is look at the opportunity and try to make a judgment call whether or not the stock is a buy, it has a prosperous future, and what we should pay for the stock. Now, this is according to S&P Capital IQ data. Consensus FY 2024 top line estimates lowered, and not by a lot, but you can see they're lowered here from January 7th to January 10th. The consensus FY 2025 revenue projection for Unity was also revised downwards, and that's the same period. It implies that the market currently expects Unity's revenue growth to decelerate from 54% in 2023 to 13% and 16.4% for 2024 and 2025, respectively. Now, of course, that's a big deal. If you're buying this stock because it's a growth stock and the growth slows down, you know what happens, especially when there's a premium to the valuation. So you could easily make the argument that the sell-off was justified for these reasons. So if you already own the stock, well, what do? Let's talk about that a little bit more. And if you don't own the stock, is it a potential opportunity? Now, if you look at this is from Polaris Market Research, and this is talking about the growth in game engines. So this is a game engine market, and it's going from 2019 to 2032. And you can see that the compound annual growth rate here is expected to grow at about 17.1% over the next decade. Now, of course, this is for all game engines. If you know what Unity is about, it's focused mostly on mobile. And now with that said, if you watch the other video, you'll understand that it's not just about gaming. Unity is used for many more applications, especially with the recent acquisitions. When you think of Weta, you think of advertising, Iron Source, but primarily when people think about Unity, you're going to think of indie games, even though they're getting more. If you look at platform and PC, you're going to think more of an Epic Games and not a Unity. Now, mobile gaming is growing as well, but you have to remember too that during the pandemic, we had gaming as a whole. That whole sector, that whole segment really had some pull through because people were staying at home playing games and so on. Now, mobile is the answer for people that are out and about. Say you're going to be commuting to work on a train or a subway or something like that. You could play a game on your phone. And that is more and more the future. People like me that might be Gen X, we grew up playing anything from Atari to the Nintendo, the NES system, and we're more on the run. We don't have time to play on a PC rig or a console, and so we might play more mobile apps. And if you watch the other video, you'll understand there are exciting opportunities around artificial intelligence for Unity as well. Now, Wall Street analysts have been mixed on this recent news to, I guess, mostly negative. But you can see on the highlighted portion of the screen here, JMP Securities analysts said they estimate Unity's cost savings to be about $400 million in annualized operating expenses. And that's a big number for a company this size. And so the question that we have, which we can't answer because we don't work for Unity, of course, the people that they're firing, are they going to be significant to the bottom line? Is it just trimming fat? It seems like a big number, 25%. Can they still do the things that they need to do with the remaining 75% of staff? And we just don't know the answer to that. So when you think of Unity's software business model, it is unique in the sense this is not like software as a service. When you think of enterprise, like a CrowdStrike or a Datadog or a Zscaler or something like that. So this is a bit different animal. It's kind of its own unique thing. So Unity generates revenue through multiple sources. They have Unity Pro and Unity Plus subscriptions that charges developers for access to advanced features and services. And then Unity Ads, of course, earns revenue by offering ad monetization platform for mobile games. And then they have Unity Analytics, provides analytics services to game developers for insights into player behavior. And the idea there is you can use it in conjunction with the advertising. And then they have the Asset Store. It takes a share of the revenue generated by developers who sell assets, plugins, and tools on the Unity Asset Store, similar to what you'd have on the Apple Store and so on. So Unity is diversified in this sense. It's not all just software and subscription revenue. They've got a unique model here. You can see right now that stocks trade at about $34 a share. It's down 1.5% today. Over the past year, it's up 8.59%. And of course, this is one of those IPOs that went public here September 2020. And it's been a roller coaster. In fact, this stock was around $200 a share back in November of 2021. From $200 to $34 today. You can see it's got about 10.5% short interest. Market cap is $13.14 billion. In that 52-week range, $22.20 all the way up to $50.08, what we called in the last video here in June. So the growth on Seeking Alpha here is great. I mean, 61.56%. Now that's revenue growth year over year. If you look at the forward revenue growth, 29.45%. And as we alluded to earlier, this number could even be significantly less than 30%. And we just don't know the answer. If you look at some of these other stats, I mean, EPS forward long-term growth, 98%. Levered free cash flow growth year over year, 429%, A+. Now, this is given a growth metric on Seeking Alpha of an A+, valuation D-, profitability C+, momentum C. So profitability, you look at gross profit margin, 70%. That's pretty decent. But then if you look at like EBITDA margin, well, it's negative 17.98%. Now, of course, the company is trying to improve this, and one of the ways they're doing that is by laying off 25% of its staff. And this is a metric I've been looking at lately. It's not really that significant. It's not the reason to buy or sell a stock. It's just one tool in the tool belt. But net income per employee, I just showed a stat the other day comparing NVIDIA and Amazon and a few names in Discord. This is at a negative 111,000 per employee. Now, valuation, this is showing a PE non-GAAP TTM on Seeking Alpha 52.77. So working towards profitability. And of course, this is non-GAAP. And generally, you'd love to see a GAAP TTM PE ratio, and you're not going to have one here. So keep that in mind. Now, that PEG non-GAAP is an A plus at 0.47. The EV to sales ratio, 7.26. The price to sales is going to be 6.4. The forward is 6.1. And the price to book is a 4.12. So definitely not cheap metrics, especially if you just look at a price to sales of a 6. And with that said, when it was $200 a share, it was significantly higher than that. Of course, never a reason to buy or sell a stock, but interesting nonetheless. So we had earnings here November 9th, and they beat by 13 cents. So EPS normalized actual 32 cents, EPS GAAP actual negative 32 cents, and that beat by 17 cents. So we've already seen an improvement before this recent news, and it'll be interesting to see what happens over the next several quarters, especially if they can maintain their growth while improving profitability. And the revenue actual is just important to note here, $544.21 million. That was a miss by about $5.2 million. All right, we always talk about this is never a reason to buy or sell a stock. Analysts' ratings are wrong all the time, but I think it's good to look at it, just to have an idea. So the highest street target is $50. The lowest is $16. That's a big range. The average is $33.80. Of course, that $16 brings it down. But if you look at the blended average here, $33.80. And right now the stock's trading at $34.08. So it's a 0.76% downside. And these are generally 12-month targets, so 12-month price targets. But you've got 8 buys, 11 holds, and 2 sells. Now, you've seen me go through these before, and this is probably one of the worst that we've seen in quite a while. But it makes sense. If you think about it, it's justified. You've got new leadership. You have the whole debacle where they basically alienated their followers, pissed off a lot of developers. That's never good. Then you've got this 25% reduction in workforce. And of course, you can look, if a lot of negative news is already piling up and you get more negative, it's easy to look at that as negative news. Because generally speaking, that news could be good or bad, depending on how you look at it. But if the sentiment's already bad, it's just going to make it worse. In other words, Unity is not going to get the benefit of the doubt. And Unity is going to have to prove themselves to investors and to Wall Street. Next, I want to look at a chart and tell you what I think. If you're new here, guys, please do me a favor, subscribe to the channel, click that bell for notifications. And if this video is helpful, drop me a like and drop me a comment. A reminder, I want you to go watch that 11-minute video if you've got some time after this one. I think it'll be very helpful. I'll put a card at the end as soon as this video is over. Go check it out. Okay, Unity RSI 42.95. So not quite oversold at 30, but it's getting down there. It's neutral right now. Now, every single Wednesday, we do what's called chart day. Patreon Discord. When you see orange, that's a previous chart day. Yellow is today's chart day. I'm just going to talk through it. And if you'd like to join us, we do live streams every Monday, Wednesday, and Friday at 9 o'clock a.m. Eastern. Those are recorded. And we're offering a free trial right now. It's a 7-day free trial, no strings attached. Go check it out. Visit patreon.com/firedupwealth. So previous chart days over here, the most recent one's at the top. Needs to hold 29.30 for possible upside to 37. Downside, watch trend $30 and less. And that's basically showing you that there's some weakness here. If it can hold $30, what that's saying is it can basically fall from here at $34, go to 29.30. If it holds 29.30 support, it probably bounces and comes back to 37. Those are just possibilities. There's, no guarantees when you're looking at charts. They're really just possibilities. If you recall earlier, though, we said it was probably going to go to $50 momentum. It did exactly that. So we're not always right, but we have made some great calls, especially over the last couple of years. You can look at the moving averages. This yellow line is the 50-day moving average. So right now, the stock is just hanging out right in that area. And you can see this trend line is a little bit lower. So this trend line is going to be just under $30, $29 and change. And so that 29.30 is kind of on trend. It doesn't mean it has to go that low, but there's a decent chance it could go there. And of course, it can always go lower. If you look back in June, this stock basically ripped here from June. This is 1st of June, $26 to $50. It basically doubled and then fell off a cliff and lost half its value. This is a double bottom right here. So if you look back November 2022 to here, pretty much a double bottom, a little bit of a slant to that. And then oftentimes with a double bottom, you'll see a rip up. Anytime you see a huge parabolic kind of move like that, where it's straight up and down, if it doesn't go into like a bull flag pattern and it breaks down like this, oftentimes you'll see a 50% retracement. So you take that top number plus that bottom number, divided by 2, and you see that quite often. So you're kind of in that 50% retracement range right now. And if you look at this Fibonacci retracement ribbon, I mean, it's just a huge range, and it's possible it comes down and does a triple bottom retest that's $22 range. A lot of that's going to depend on earnings, and that's, we just don't know. And earnings are coming up here. So February 26th is going to be earnings. And of course, that's a little ways away. You're talking about 6 weeks from now. And I think the stock probably just kind of churns around these levels somewhere in this range, and earnings are going to make it pop or drop. Now, if you go watch that previous video from June of 2023, I tell you that, I like the stock in the 30s. I wouldn't chase it, and it's probably going to go to $50, but I prefer to DCA in the 30s. Of course, you're in the 30s now. If you can get it below 30s in the 20s, even better. I will say that out of my top 30 holdings, so my top 30 holdings, that's 76% concentration. This is the only stock in that top 30 that's not green. So I'm not perfect. I make mistakes. And I started buying this stock, earlier than I should have, and it kept going down. And at a certain point, I'm not necessarily adding a lot of shares. If I didn't own this stock and I wanted to start a new position, you might want to consider nibbling here, but it is high risk. I think if you don't have a high risk appetite, you probably just have to wait for earnings and see what happens. If it does come back in the 20s, I think my confidence level is a lot better, to DCA. If you start DCAing 29 to 22, even if it gets a little bit lower than that, it's a lot better. It's a lot tighter range to dollar cost average. In the end, you always have to do what's best for you and your money. I look at this stock as something you would hold as a metaverse play. That's, when you look at secular growth trends, this is a metaverse play for me, and I'm holding it 5 to 10 years. And I know that this is going to be a bit more speculative. It's going to have volatility. I do have conviction in this stock, but it's not certainly one that I would recommend just a new investor go run out and buy. It's not a core position or anything like that for most people. It is in my top 30, but it's towards the bottom of that list, like number 29 or 30. So I have higher conviction for a speculative type name. I actually consider it growth and not spec. And I do think this company will do well longer term. I think there's tremendous opportunity with an AI. I think the leadership's going to figure it out. And I think you'll see good things, but it might not happen overnight. So please do me a favor and go watch that previous video. It only got about 7,000 views. I think it's pretty good. In fact, I watched it before I made this video. It's got some good edits in it. There's a card above here. You can go click that and watch it right now. If you're new, make sure you hit that subscribe button before you leave. If this video is helpful, drop me a like and a comment. As always, I appreciate your time and attention. Have a great rest of your day. Take care.